Hi, this is Akshay Shrimanka, CEO and founder of Shay CPA, and today I want to go through some tips for organizing your finances for year end. First of all, the first tip is organize your finances, and in particular, for those of you tech founders that have taken advantage of the Paycheck Protection Program and the economic injuries disaster loans, you definitely need to have your bookkeeping organized. Many of you will be reviewing your forgiveness applications at this point and trying to get forgiveness at least on the PPP loans. So it is extremely important to keep the bookkeeping organized, have your payroll records, and even after you apply for forgiveness, you're going to have to keep hold of those records, I think, at a bare minimum of 6 years. So you definitely want to save all this information as PDFs and archive them somewhere safe, because as many tech founders know that you may exit your business within a 5-year period, and then someone may come after you after that. The SBA may request documents after that. So it is good to just keep hold of those documents, and for the executives that have a fiduciary responsibility to the corporation, they could be contacted in the future to get requests for documents. So I definitely say, organize your finances. Second thing is, in regards to the PPP, is that the expenses, the payroll expenses, the benefits, rent, anything that you've attributed towards PPP expenses, which you're going to want to be forgiven, will not be tax deductible. So, this also sort of alters the calculus of when you apply for forgiveness, whether you should do it this year, whether you should do it next year. And you have to look at your pre-tax income to see whether, okay, if we knock off $100,000 or $150,000 worth of payroll that we cannot deduct because of it being subject to forgiveness, would that now mean that the company owes more taxes, right? So that's a big aspect of the PPP, is since it's not deductible at the moment, you need to be able to understand what the tax impact of that is. Second thing, the next thing I want to touch on briefly is preparing 1099. So for 2020, there are new 1099 NEC forms. The 1099 miscellaneous form has not gone away, it's still there. However, contractor payments will be reported on this new tax form. Many of you who are using services like Gusto, JustWorks, you won't really notice. This stuff will happen in the background. They'll prepare the tax forms for you. However, what I find working with tech companies is often there are wires that are sent to, let's say, accountants, lawyers that are outside of those payroll systems. You may be using Bill.com for some of your payments. So you need to evaluate which contractors need to be issued 1099s, and not just simply say, oh, it's just JustWorks and Gusto that are going to be taking care of that, because there could be some additional employees that are outside of that are going to be paid. Next thing is state franchise income taxes and estimated taxes. This year for COVID, many people have moved, right? So their employees are moving, employers have relocated as well. So you need to review all of that and need to understand where it is that your company has nexus and domicile, and understand where you need to be filing your state tax returns. So that's something that, feel free to reach out to us if you want to understand that more better. And the next thing is the payroll and sales tax. Again, it's the same thing, because of COVID, so many people have moved residency, and that has also shifted. It could shift your, the filings that your business has to make as a result. So that's a big thing that we need to look at. So I've sort of highlighted that in the blog. Another thing, many tech companies have foreign bank accounts, a foreign presence. Maybe your dev team is somewhere in Europe or in Asia or in Latin America, and you may have a subsidiary or some reporting requirements as a result of that, right? So if you have a foreign bank account, there is a FBAR filing reporting requirement. If you have a subsidiary in a foreign country, there is a information return requirement here in the US. And if you have foreign shareholders that usually own more than 20 to 25% of the company, there's also some reporting requirements there as well. So this is another area where the penalties are pretty steep. So it is a great idea to speak to your CPA, speak to your tax advisor about whether there's any exposure in this area, and make sure that you file everything that's needed to remain compliant. And yeah, I would just say, speak to us as your tax advisors, CPAs before the end of the year, before the end of the fourth quarter, because at this point we can provide some action, money saving advice, and also mentally prepare you. Like if you know that you're going to owe a certain amount of taxes, it's better to know now versus the day before you owe them in April, right? So founders, schedule time to speak with us. There's a link to my calendar here that I'm going to have on the blog post, so feel free to reach out and we can discuss more. Thank you.